Hello, guys. Once again, welcome back to my trading channel. It has been quite a while since we last interacted. I have been busy just focusing on my growth, and today I have a very beautiful trade recap that I would love for us to go through. So, initially, I was trading the London Kilson today and managed to get a very beautiful setup. So I was trading Gbpusd pair, and let me walk you through the entry criteria that I used to catch a 1 to 3 RR, which was a very quick move. So starting the week, I was bullish on the dollar index. If you look at the dollar index, you can see that we were having a bullish market structure there from the weekly time frame. You can actually monitor how price has been reacting from the weekly bullish fair value gap, which is BC. And remember that we have been having this monthly fair value gap as our draw on liquidity. So currently, price moved from this fair value gap, and I'm expecting to see higher prices. Initially, my draw on liquidity was last week's high, the high of this candle, which has actually been traded into. And looking at the daily time frame, we can see that there was a change in state of delivery after price had traded into the weekly bullish fair value gap. And yesterday, price closed with an indecision candle, but upon opening today, we experienced a bullish move to the upside. So this pool of buy side has actually been taken out. So that was my draw on liquidity for the London session. Looking at the 4 hour time frame, we can see a very beautiful setup which unfolded. And if you can notice that after price took out these low, which were the sell stops there, we had got a shift in structure at this point. So that is our market structure shift. And then broke structure left behind a bullish order block and traded back into that zone. And now price is going higher. So this is what informed my decision of shorting the pound pair. So looking at this one, we can see that from the 4 hour time frame, price has been bearish after we took out this pool of liquidity here in the form of buy stops. And then now we were coming lower, seeking these pools of sell side liquidity. So if you're keen, you will see that price was leaving behind bearish order blocks, which acted as very good zones for the sell setups. This was a fresh zone. Price never traded into it. Then today we were having this beautiful zone, which I used for my shots on GBPUSD, coming down to the 5 minute time frame. So when the dollar is bullish, we know that we want to see bearish setups for the pound. And we also know that during the London kill zone, we can spot potential setups. So my attention was drawn to this level because if you're trading and you may be thinking that we are going higher, there are people who were anticipating these demand zone to hold or that bullish order block to hold, but little did they know that it was just a setup and it would eventually fail. So looking at what unfolded, we can see that we had got these pools of sell side liquidity. Also, that one would have been actually a good reason for somebody to go along. But now the only problem is that the order flow of the market is currently showing us that we are to go lower. So this one was just used as an inducement zone to trick people. So and initially, somebody may think of this zone as a bullish breaker that would support price to go higher, and price would move in that intended direction. But no, it doesn't happen that way. So we are expecting that this zone should be invalidated, and that is what actually happened when price took out this high and took out the liquidity, traded back into this order block here in form of a corrective move. So after I had witnessed this breaker fail and treated this as my liquidity, which would be buy side liquidity. Now I wanted to see a model which would allow me to target lower prices, with the immediate drop being the previous day low. Then the previous week low would also be a reasonable target point. And my entry model used for that trade was this inversion fair value gap. So upon price taking out this buy side liquidity and trading into this bullish fair value gap, which has failed. So price needs to trade through it. Now the back and forth movement, it goes through it and then comes back inside it for us to be sure that we are going lower. So that was my entry model for the trade there. So it was validated. Then the stop loss is just slightly above that level. That is a 5 pip stop loss, targeting a 1 to 3 RR, something like this. Or initially, just 20 pips would be a beautiful target, 1 to 3.5 RR. And that is my trade for today, which unfolded beautifully. And also, another entry model presented itself in case somebody had missed out on this inversion fair value gap, which is the Ifvg. There was another chance to onboard the move, whereby we have got this law being taken out, and that is a market structure shift. After that law was taken out, you can notice that we left behind a bearish breaker block, which is the last bearish candle before the structural shift. So this is a breaker block, a bearish breaker block, and it actually traded into the breaker and respected the move. So a second entry would have been this point, this level, then the stop loss just at this high. So the only limitation to trading a breaker block is that it will leave you to a high risk exposure. But so long as you are in the right direction with the order flow, you need not to fear anything. So with the breaker, we would target the previous weekly, and that is a 1 to 2.5 RR. And that's how we normally trade these models. These are beautiful delivery, which is very quick. And I am done for the week. And also, I hope that you have all had a beautiful trading week. And if you wish to have a good insight into some of these content and some of these concepts, you should actually subscribe to the channel for more updates like this. And before signing out, I would love to show you the execution for the trade which I took. So this is my trade execution on my MT5 Gbpusd on the minute 5 time frame. The execution at the consequent encroachment of the bullish inversion fair value gap. So that's all for today, and may you all have a blessed weekend as we wait for a new trading week.